No doubt you've heard the phrase 100 times, save for a rainy day. But recent surveys suggest most Canadians aren't, and they really don't know where to start. Jeffrey Schwartz is the Executive Director of Consolidated Credit Counseling Services of Canada, and he is here to help you and me get our savings on the right track. You know, Jeffrey, everyone knows it. We're supposed to do it. Easier said than done. Why is it so hard for people to save?
You know what, I'm not 100% sure why, but there could be any number of reasons, and it is a challenge for people. I think we're bombarded with marketing statements that we need this, we have to have that, and one of the things that we're seeing is consumer spending is up, so I kind of see that's where it's going with respect to savings these days.
And this is a particularly difficult time of year because over the next little while the Christmas bills come in, people will recognize just how much they perhaps went overboard, and then they start to panic. So what's your first tip about saving? Well,
the first thing is everybody's worried about the math of savings, but it's not really the math, it's a mental game, okay? You want to try and master the mental game or the mental side of savings first and turn it into a habit if you can. And we start off with things that are small. Maybe try saving for a vacation or even paying down a holiday debt. And then once you've gotten good at it, then go to the bigger things, maybe like saving for the down payment on a home or even your retirement.
When you say start small, how much should we be saving? We hear you should be saving 10% of your take-home pay every month.
And that's what we try and tell people to do. But you know what? Sometimes that's difficult.
Yeah.
I mean, savings peaked in the early 80s at around 20%, but right now personal savings is less than a quarter of that. Wow. So we really want to try and get to those targets of 10 to 15%.
All right, so how can people make this a habit?
Well, one of the things that we want to do with respect to making it a habit is maybe taking it out of their hands. Try and do it in such a way that it becomes painless for people. So there's automatic predetermined deductions from your paycheck, or perhaps even rounding up your direct debit purchases to say $5 or $10 and have that money automatically go into a savings account. The other option there is some people like the physical nature of doing it and actually putting money into a piggy bank or putting money somewhere as a savings vehicle for themselves. It really is dependent upon you, but you want to try and do it the best way you can.
If people have debt, though, credit card debt at 18% or whatever it may be, isn't it better to pay down your debt first than try and save?
Well, I think you want to do both. Obviously, I know, it's a challenge, but truthfully, you want to make your money work as efficiently as you possibly can. One of the concerns about not saving early on is the fact that you don't let it grow. And you want to make sure that you give it enough time to grow, whether it's through investment or whether it's just putting it into the bank. I know interest rates aren't that high right now, but hopefully we'll get a better return later on.
You say people have to change their mindset. They have to treat savings like it's an expense, like a cable bill, like a phone bill, like a so you have to pay yourself first.
One of the challenges with savings is a lot of people leave it to the end. They say, okay, well, you know what, I'll save whatever I have left over. But we can't do that. We actually have to treat it like a line item, like your mortgage payment, like a rent payment, like a payment on your car, and put it in there just like you would any other expense. You want to also do that potentially with paying off debt. It's the exact same thing. Otherwise, I mean, do we really have anything left over at the end of the month?
And there are some vehicles that people can use to help them with their savings, RRSPs, for example. What else where we, in essence, get free money from the government?
Well, let's talk about the best one that I think of is if you have children and you want to save for their education, is the RESP. I mean, the stock market isn't doing so well, but where can you get a 20% return right off the bat? Up to a limit, the government will match your contributions to your RSP at the rate of 20%. That's not so bad. Then there's the RRSP, and then potentially the TFSA. I mean, that's an excellent vehicle.
It's a tax-free savings account.
Tax-free savings account. You can put money into that and take it out at any time without any tax consequences.
Some good advice. We appreciate you coming in, Jeffrey. Thank you.
You're welcome.
Jeffrey Schwartz is with Consolidated Credit Counseling Services of Canada, and you can find the link to that on our website at canadaam.ctv.